There's a single document sitting inside a government database right now with your name on it that a significant number of Americans receiving Social Security have never requested, never reviewed, and never acted on. And I want to be completely honest with you about what that silence is costing them. Because for many of the people who finally do sit down and go through this document carefully, what they find on the inside changes their monthly income permanently, not after a long legal battle, not after hiring an expensive attorney, not years from now after some complicated appeals process. Their monthly check goes up and it stays up for the rest of their lives, starting as soon as the correction is processed. I have seen this happen for people adding $200 a month to their benefit. I have seen it happen for people adding $300, $400, $500 a month. I have personally seen cases where a single filing added more than $600 a month to a retiree's Social Security check. Money they were legally entitled to, money that had been owed to them for years. Money that was simply sitting there uncollected because nobody had explained that this document existed or told them what to do once they had it in their hands. And here's the part that should make every senior watching this video stop whatever else they are doing right now. The reason most of them did not have that money before is not because they did anything wrong. It is not because they failed to qualify for some special benefit. It is not because their income was too high or too low or their work history was too short. The reason is simply this: the Social Security Administration calculated their benefit using numbers that were wrong. And the SSA does not go back and fix wrong numbers on its own. It waits for you to find the mistake. It waits for you to file the document. And if you never file it, the mistake stays in your record forever, quietly reducing your monthly check every single month for the rest of your retirement. I'm going to walk you through exactly what this document is, where to get it for free, how long it takes to request it, and most importantly, what to look for once you have it in front of you, because just pulling the document is not what changes anything. Plenty of people request it, scan it briefly, assume everything looks fine, and put it away. That is not what I am talking about. I am talking about knowing the specific things to check, the specific numbers to compare, the specific years to look at most carefully, and the specific filing to make when you find what most people find when they actually look. That is the part that moves the needle. That is what this video is about. Stay with me until the very end because the single most important piece of information, the part that actually produces the larger check, is something that almost no one explains clearly. Financial advisors gloss over it. News segments skip it entirely. And the SSA website technically provides all the instructions, but buries them in language that most people find impossible to navigate without a guide. Once you understand it, you will look at your Social Security benefit differently for the rest of your life. Before we get into it, subscribe right now and turn on the notification bell. Everything covered on this channel is exactly this kind of information. Practical, direct, specific things that affect how much money lands in your account every single month. People who are subscribed do not miss this. Subscribe now and let us get into it. The document is called the Social Security Statement. It is free. It lives inside a government account called My Social Security, which you access at ssa.gov. If you have never created one of those accounts, it takes approximately 5 minutes to set up. And once you are logged in, your statement is right there waiting for you. And what is inside that statement is something the overwhelming majority of Americans have genuinely never seen, even people who have been receiving Social Security for years. What you will find inside is your complete earnings history. Every single year you have ever worked and paid into Social Security, going all the way back to your very first job. The teenager job, the summer job in high school, the entry-level position you had in your 20s. Every year, every employer, every dollar of reported earnings going back decades, all of it is in there. And here is why reviewing that history has the potential to increase your benefits significantly. Here is the part I want you to stay focused on because it is the foundation of everything else I'm going to explain. Social Security does not calculate your retirement benefit based on your most recent salary. It does not base it on your last 10 years of work. It does not average your entire career. What it does is this: it takes your 35 highest earning years, adjusts each of those years for inflation using a process called wage indexing, averages the adjusted figures together, and then runs that average through a formula to produce your monthly benefit amount. That 35-year average is everything. It is the single most important number in your entire Social Security calculation. Every dollar that goes into that average affects your monthly check. Every dollar that is missing from that average costs you money every month for the rest of your life. And the only place you can see the raw data behind that number, year by year, going back across your entire career, is your Social Security statement. So, why does reviewing that statement lead to a larger check for so many people who actually do it? Because the data in your statement did not come from you. It came from employer payroll reports submitted over the course of your entire working life. Those reports were filed by dozens of different employers over many decades. Some were large companies with sophisticated payroll systems. Many were small businesses where payroll was handled manually by an office manager or by the owner themselves sitting at a kitchen table with a handwritten ledger. And over 30, 40, 50 years of employment history, errors happen. Numbers get submitted incorrectly, figures get transposed, entire years of earnings get misreported at a fraction of what was actually paid. Here is what those errors mean in practical terms. If the number recorded in your Social Security earnings history for a particular year is lower than what you actually earned that year, your 35-year average is lower than it should be. If your average is lower than it should be, your monthly benefit is lower than it should be. And it will stay lower than it should be for every single month of your retirement until someone identifies the error, files the correct document, and forces a recalculation. The Social Security Administration does not find these errors for you. There is no automated review system that catches discrepancies. There is no alert that fires when a number looks suspicious. There is no letter that arrives in your mailbox saying that your earnings record may contain an inaccuracy. The data goes in, the benefit gets calculated, and unless you personally open your statement and compare those numbers against your own employment records, those errors sit there silently costing you money every month, year after year, for the entire length of your retirement. According to figures the SSA itself has published, a single year of missing or incorrect earnings in your record reduces your monthly Social Security benefit by approximately $100. That is $1,200 a year. Over a 20-year retirement, one single incorrect year in your earnings history costs you $24,000. Over a 25-year retirement, that same single error costs you $30,000. And if you have 2 or 3 incorrect years, which is not uncommon for people with the employment history I'm about to describe, you are potentially talking about a lifetime income loss that exceeds 6 figures. That is the money this document can recover. That is why this matters. Now, let me tell you specifically who is most likely to find something worth correcting when they pull their statement, because this is not a theoretical risk that applies equally to everyone. There are certain categories of workers whose earnings history is significantly more likely to contain errors. And if you fall into any of these categories, you should treat reviewing your statement not as a suggestion, but as a financial priority. If you worked for a small business at any point during the 1970s, 1980s, or 1990s, your earnings history deserves a very careful look. Payroll reporting during those decades was handled manually, and the error rate was substantially higher than it is today. Small business owners were doing their own payroll by hand, mailing paper forms to the government, and doing their best with a process that had no automatic checks or verification systems. Errors were common and often went uncorrected for decades because nobody was looking for them. If you were self employed at any point in your career, if you worked as a freelancer, an independent contractor, or ran your own business and paid self employment tax, your earnings record requires close attention. Self-employment income gets reported through Schedule SE on your tax return, and errors on that form sometimes result in earnings being credited to your Social Security record at the wrong amount or not being credited at all. Self-employed individuals have a higher rate of earnings record discrepancies than traditionally employed workers, and many of them have no idea. If you changed jobs frequently throughout your career, each job transition was another opportunity for incorrect data to be submitted to the SSA by a new employer. People who worked for 10, 12, 15 different employers over the course of their career have 15 different chances for a reporting error to be introduced into their earnings history. Even a 1 or 2% error in the reported figure for a high earning year can translate into a meaningful reduction in your monthly benefit. If you are a woman who changed your last name after marriage, or after a divorce without updating your records with the Social Security Administration, there is a specific type of error that may be affecting your benefit right now. When your name on file with the SSA does not match the name your employer used when submitting your payroll records, those earnings can end up unassigned. The SSA receives the information, but it cannot match it to your account because the name does not match. That money sits in what the SSA calls a suspense file, waiting to be claimed, and if you never identify the discrepancy and file to correct it, it never gets credited to your record. Women who went through a name change at any point in their working life and did not immediately notify the SSA should pull their statement and review their earnings history carefully. There may be entire years of work that were credited to nobody. There is one more category that surprises people when I bring it up, and it is worth spending a moment on because the financial impact can be substantial. If you have fewer than 35 years of earnings on record because you took time away from the workforce to raise children, to care for an aging parent, to go back to school, or because you worked in a job that was not covered by Social Security, such as certain federal, state, or local government positions, the SSA fills those empty years with zeros. Those zeros go directly into your 35-year average and lower your monthly benefit. That is the rule, and there is nothing to correct about the rule itself. But here's the thing, sometimes those years are not actually empty. Sometimes you worked during a period that shows up as zero, and the earnings from that work simply were not recorded correctly or were not credited to your account. Finding one real year of work that was recorded as zero and getting it corrected can add between $50 and $150 a month to your benefit. Finding two or three such years, which is possible for people with complex employment histories, can add significantly more. Let me give you a real example so you can see what this actually looks like in practice. A retired teacher from Ohio spent 4 years in the mid-1980s working summers and evenings for a small landscaping company while she was still early in her teaching career. It was additional income she was using to pay off student loans, and she worked hard for it and paid taxes on every dollar. When she finally pulled her Social Security statement for the first time 3 years before she was planning to retire, she noticed that 2 of those 4 years with the landscaping company showed earnings that were approximately half of what she had actually been paid. The owner of the company had since retired himself, and the business no longer existed. But she had held on to her old tax returns and found the W-2 forms from those years in a storage box in her garage. She filed a correction with the SSA using those W-2 forms as documentation. The correction was processed in 47 days. Her monthly Social Security benefit when she eventually filed for retirement was $280 higher every month than it would have been without the correction. That is $3,360 a year. Over a 20-year retirement, that correction is worth $67,000. She found it because she looked. She recovered it because she knew what form to file. Most people do not look. Most people do not know what form to file. That is exactly what I'm about to tell you. Here's the step-by-step process for doing this yourself. Go to ssa.gov and look for the My Social Security login. Create an account if you do not have one already. The process requires you to verify your identity, which you can do with your Social Security number, your date of birth, and some basic information from a recent financial account. Most people complete the whole setup in under 10 minutes. Once you're logged in, navigate to your Social Security statement. Click on the Earnings History section. You will see a list of every year you have ever worked going back to the very beginning, with a dollar figure next to each year representing the earnings that were reported to the SSA for that year. Your job from this point forward is to compare those numbers against your own records. W-2 forms from past employers, old tax returns, pay stubs, any documentation you have held onto over the years. Go through the list year by year. You are looking for 3 specific things. First, years where the dollar amount shown in your statement is lower than what you actually earned that year based on your own records. Even a partial discrepancy matters, especially in a high-earning year. Second, years that appear as zero in your statement when you know you were working during that period and earning money that was subject to Social Security tax. Third, years that are missing from the list entirely, which can happen if earnings were submitted under a different name or Social Security number than the one currently associated with your account. Go slowly, be methodical. The years that deserve the most attention are your highest earning years because those are the years most likely to be included in your 35-year average. And because an error in a high earning year has a proportionally larger impact on your benefit than an error in a low earning year. A discrepancy in a year where you made good money matters more than a discrepancy in a year where you were just starting out. If you find something that does not match, the form you need is called a Request for Correction of Earnings Record. It is available directly from the Social Security Administration. You can download it from ssa.gov or request it by calling the SSA directly. You submit the form along with documentation proving what your actual earnings were for the year in question. The most valuable documentation you can provide is a W 2 form from the employer for that year. W 2 forms are the gold standard because they show exactly what was reported to the federal government, and they are difficult to dispute. If you do not have your old W 2 forms, do not assume the process is over before it started. Here is something most people never find out. The SSA can obtain copies of W 2 forms going back to 1978 on your behalf at no charge when the purpose is correcting your Social Security earnings record. You do not need to track down your old paperwork from 40 years ago if you do not have it. The SSA has access to those records and can pull them as part of the correction process. Tax returns are also strong supporting documentation, particularly for self-employed individuals who reported their earnings on Schedule C and Schedule SE. Pay stubs can serve as supporting evidence, though they are typically not sufficient on their own and work best when combined with other documentation. In some cases, particularly for older employment where records are difficult to obtain, a signed statement from a former employer or a union record search can help establish the correct earnings figure. The SSA typically processes earnings correction requests within 10 to 90 days, depending on the complexity of the correction and the availability of the supporting records. Once the correction is processed and approved, your benefit is recalculated using the corrected figures, and the new, higher amount begins showing up in your payments going forward. There is no retroactive payment for the years you were receiving a lower benefit before the correction. The correction applies from the point it is processed forward, which is precisely why it is better to find and file these corrections as early as possible rather than waiting until you are already deep into retirement. One of the most common questions people ask when I explain this process is whether there is a deadline for filing corrections. Here is the honest answer. For earnings errors from the past 3 years, there is a relatively straightforward correction process, and the documentation requirements are more flexible. For errors going back further than 3 years, the process requires more documentation and takes more time, but the corrections are still absolutely available to file, and the SSA will still process them. There is no hard cutoff that says errors from 20 or 30 years ago cannot be corrected. If you have the documentation to support the correction, it is worth filing regardless of how long ago the error occurred. I want to be explicit about this point because it is one of the biggest reasons people do not pursue corrections that could significantly increase their monthly income. They assume that because something happened a long time ago, it is too late to do anything about it. That assumption is wrong and it is expensive. If you worked for an employer 25 years ago and those earnings were reported incorrectly and you still have your W 2 from that year, you can file a correction today. The SSA will review it. And if the documentation supports the correction, your benefit will be recalculated. There is one additional step that many people overlook entirely when they go through this process, and it is worth including because it catches a type of error that the standard earnings history review does not always surface. After you have reviewed your earnings history year by year, look at the section of your statement that shows your estimated monthly benefit at various claiming ages. That estimate is calculated based on your current earnings record. If your earnings record contains errors and those errors lower your average, the estimated benefit shown on your statement is also lower than what it should be. Correcting the errors and then reviewing the updated estimate gives you a much more accurate picture of what your actual benefit will be when you file, which in turn lets you make a more informed decision about when to claim. Timing your claim correctly is one of the most powerful levers available for increasing your Social Security income. Claiming at 62 instead of waiting until your full retirement age results in a permanent reduction of up to 30% of your benefit. Waiting until 70 instead of claiming at your full retirement age adds 8% per year in delayed retirement credits. The difference between claiming at 62 and waiting until 70 can be as large as 76% of your base benefit amount. But that calculation only produces a meaningful result if your base benefit is calculated correctly in the first place. Getting your earnings record corrected and then making an informed decision about when to claim, those two things working together, is where the largest gains come from. Your Social Security benefit is built on decades of earnings data. That data was submitted by employers over the course of your entire career, processed by a system that has no mechanism for automatically catching its own errors, and used to calculate a monthly check that you may receive for 20, 25, or 30 or more years. If any of that data is wrong, your check is smaller than it should be, and it will remain smaller than it should be for every single month of your retirement until you find the error and file the correction. The statement that lets you check everything is free. It takes about 5 minutes to access at ssa.gov, and going through it carefully year by year, comparing the numbers against your own records and filing a correction if you find something that does not match, is one of the most financially valuable things you can do for your retirement income right now. Most people spend more time reviewing the bill at a restaurant than they have ever spent looking at the earnings record that determines their income for the rest of their lives. This process is worth an afternoon. It is worth a weekend. It is worth whatever time it takes because for a significant number of people who actually do it, what they find adds hundreds of dollars a month to a check they will receive for the rest of their lives. Go to ssa.give. Create your account if you do not have one. Open your statement. Find the earnings history section. Compare those numbers year by year against any records you have. Look for numbers that are too low, years that show zero when you were working, and years that are missing entirely. Pay the closest attention to your highest earning years. If you find something that does not match, download the Request for Correction of Earnings record form, attach your documentation, and submit it. Follow up if you do not hear back within 90 days. And remember that if you do not have your old W-2 forms, the SSA can help you obtain copies going back to 1978 at no charge. That is the whole process. It is not complicated. It is not expensive. It does not require an attorney or a financial advisor or anyone else. It requires you to look at a document that is already out there with your name on it, compare it against what you know to be true about your own working life, and file a form when you find a discrepancy. Subscribe to this channel and share this video with someone you know who is on Social Security or who is approaching retirement. Because the person sitting next to you at church, the neighbor who just retired last year, the family member who has been receiving their check for a decade without ever looking at what went into the calculation, any one of them could be in exactly this situation right now. One conversation, one shared video could be the reason they finally look at that document and find something that changes their financial life for the better permanently. The money may already be there. You just have to look for it.